Hurrah from Governor Rajan as he gets ready to say goodbye to Main Street. The RBI has announced a raft of reforms to spruce up the corporate bond markets. Most of these reforms were recommended by a working committee headed by former Deputy Governor H.R. Khan. Latha Venkatesh is here to explain the significance of these changes. Latha, what are the changes and what do they mean?
Well, a bunch of reforms have been announced. It's almost like writing a new constitution for the corporate bond market. The most important among them would be removing the 7-day restriction for lending by listed companies to banks. Now, if a listed company has a lot of money, say, for instance, Reliance Industries, it has to keep a minimum 7-day deposit with a bank. If it keeps it in the current account because it needs the money in 2 or 3 days, it doesn't earn any interest, it's zero. Now, companies like these which are flush with cash can do a repo in the corporate bond market and make money on 2-day lending, 3-day lending, 4-day lending. So really the current account of banks can shrink because of this. Good for corporates, but not very good for banks. They have to be smarter managers. But there are a number of other measures announced as well in the fixed income market. For one thing, foreign investors, FIIs or FPIs as you call them, can directly go to the exchange in which bonds are traded, called the NDSO, and trade on their own. They don't have to go through a bank. So banks lose some fees. Likewise, these FIIs can also go to the exchanges, stock exchanges, and trade on corporate bonds, buy or sell them. So there again, a little bit of margin is lost. What is good for the bond markets also is that banks can give what you call credit enhancement for corporate bonds. Many corporate bonds are illiquid, especially if you're a AA, A or a triple B. Banks can say that the first 20% of loss I will bear if the issuer doesn't pay back. Now, the 20% limit has been raised to 50%. It's called partial credit enhancement. That also is positive for the bond market. Then there are a lot of measures positive even for banks. For instance, banks can now access the foreign rupee market, what you call masala bonds, to raise tier 1 and tier 2 debt. There are other important relaxations granted by the Reserve Bank for those who have to hedge their foreign exchange. This is for corporates. If they have to hedge their foreign exchange up to 30 million, the procedures have been simplified. They're also looking at simplifying ways in which Indian corporates want to hedge their commodity risk in overseas market. There nothing has been announced, but they're looking at it. There is also a move whereby people with large exposures, that is banks having large exposures to some indebted groups, like say the Adani group, the ADAG group, the SR group, where you have large exposures to one group. There the exposures will have to be brought down, but simultaneously these groups will also be encouraged. In fact, any large corporate will be encouraged to borrow partly from the bond market. They're also going to permit brokers in the corporate repo market, as well market making in government securities. At the moment, market making is allowed, but it only happens in very liquid securities. Even in semi-liquid securities, market making is going to be allowed, in which case these market makers, PDs or brokers, can take loans, a line of credit from banks. The most important measure which was not announced today, but which was promised, is that when the Reserve Bank gives money in the repo window, daily repos, it only accepts government securities as collateral. It will start accepting corporate bonds. Now, there are to be some legal changes in the RBI Act for that. That is already commenced. When that happens, this will be a seminal change for the corporate bond market, because the bonds will become more useful. They can be given as collateral and banks can borrow money against it. That will be a very big boost. But nevertheless, you will have to say that the Reserve Bank has taken a goodish number of steps to encourage the fixed income market. It is Rajan's last gift to the corporate bond market and to the fixed income market. It's a big start, and one hopes that more steps will be taken.
That's a pretty exhaustive report. Latha stays with us.